It's not about the great business. It's about the great investment. So a company can be really good. It doesn't mean it will be a good investment. And a company can be not so good, and it could be a great investment. So the interesting thing about the investing game is, I'll tell you a few stories, then we take your questions. Okay, so first I'll bore you with my stories, then we'll get into some more interesting things. So I have a personal trainer at my health club. His name is Jason. I've been with Jason for a long time. I would look better if I ate what Jason told me to eat. I don't do that, so the result is not as good as if I follow Jason's advice, because I can only follow his advice for the physical things we do. So anyway, Jason, he's been my trainer for probably more than 12 or 14 years, been a long time. And I asked Jason, every time there's a Powerball lottery, you guys know what a Powerball lottery is? Like sometimes the payout will be like 500 million, 700 million, and whenever the payout is really big, Jason always buys a ticket, okay? So I asked Jason, I said, Jason, listen, what's going to happen if you win the Powerball? Okay, can you explain what your life is going to be like one day after you get the 500 million? Okay, so Jason thought about it, and he said, I just want to hang out at the club. Okay, so probably I said, how are you going to dress? How are you going to dress after the 500 million? He says, probably exactly the way I dress right now. And then what are you going to do in the morning? He said, I'm probably just going to come to the club. And I said, Jason, after you get the 500 million, am I going to be a client of yours? Okay, like, are you going to, like, am I going to be? He says, yeah, I'll probably keep you as a client. Some of the clients I will drop. Okay, I just make it a little flexible, which one I want. But I'll probably just come and hang out at the club, and that's it, okay? So when Jason told me that, it reminded me of what Buffett says. So what Buffett says is that you should take the job you would do if you were not getting paid. Okay? So it's very important that when you pick in terms of what career or job or company you go to work for, that if there was a way you could support yourself, pay your rent, etc., and this company paid you nothing, you still go to work there. If you do that, you have made the right decision. Okay? If you make the decision based on the highest pay or the most prestigious name or any of those things, that's the wrong way to make a decision. You will probably later regret that decision. So this is the first talk I think I'm giving where I did not put on pants. Did you notice I did not put on pants? Okay? Like it's exposed. The legs are exposed. It's terrible. Okay? So why did I not put on pants? Okay? The reason I did not put on pants is I wanted you guys to see me the way I am dressed every day. Okay? I did not wear special clothes for you today. I'm sorry. Okay? Every day, and Fahad and Jaya, they work with me. They've got sick of looking at my legs. They wished I would cover them, but it's the way it is. So every day when I go to work, I go to work in shorts. Okay? In fact, I'm dressed like this. Okay? And why do I do that? Why do I not have, because I'm running an investment fund, there's about $800 million, it's a serious activity, why do I not put on a suit and tie and go to work? Because I think I'll be less comfortable and I will not be as excited to do that every day. Okay? Like I like my Nike sneakers. Do you like my sneakers? You know, I think it's better than wearing the dress shoes. So,
hey, just a quick interruption. Mohnish Pabrai's investment strategy has delivered incredible returns, and now you can use his exact framework. We've created a free download of his investment checklist to guide your decisions and avoid expensive mistakes. Click the link below to get your copy. Now let's get back to the video.
So the reason I did this is because if Pabrai funds did not pay me, just like with Jason not getting paid, I would want some place to go to work, and I would probably dress like this. So I don't want to do something which I'm doing because I'm getting paid, because that's the wrong decision. And also I learned many things from Warren and Charlie, especially from Warren. One of the things I learned is to run an empty calendar, okay? Nothing on the schedule. Like Warren will show you his calendar for days and weeks. He has nothing on the schedule. He just comes to work, he reads. If he wants to call someone, he'll call someone, but there's nothing that at 10 a.m. he has to do something and 10:30 something else. He doesn't work like that. Neither does Charlie work like that. And when I saw that that's how these guys work, I said, that's really good. And I'll copy that. Okay, so I copied the fact that, like today I had peeking you on the schedule. Okay, I think it's the only thing on my schedule this week. Okay, usually they might maximum like one thing or something. Sometimes there's nothing on the schedule. And so how does Buffett operate, such a large company with so many CEOs, so many things, with nothing on the calendar? Because what will happen with him is some senator will call him. Mr. Buffett, can we meet tomorrow for lunch, for example, right? Or like Jeff Bezos will call him. Can we meet? Okay? And what Buffett said is, you have to be really good at saying no. Really good at saying no. So if I wanted to fill my calendar, it's very easy to fill. Every day people make all kinds of requests. Okay? So I have about 400 investors, okay, all over the world. I can't even remember the last time I ever had a phone call with any of them, or ever had an email with any of them, or when I last met them. Okay? So I learned from Warren Buffett when he ran the Buffett partnerships. He told his investors, I'm open for one day of the year when we have our meeting. And you can come to the meeting, and on that day, we can talk about whatever you want to talk about. And the other 364 days, I'm working, I'm not available to you. So if you want to ask me something, come on that one day. And I'll give you an annual letter which will explain what's going on. So Buffett said his communication to his investors was, actually he did two letters, a 6-month and 1-year letter to investors, and once a year an annual meeting. Now, when he did it like that, what happened is that his time got freed up, right? Because he doesn't have to, like, let's say my fund goes down 20%. I don't want to sit there all day answering questions why it's down. Okay, so actually what happens is, when the fund is down, nobody calls because they're very well trained. I spent a lot of time training them because they know even if they call, they get no data. So there's no point calling. Okay, so basically what happens is that, and I did all of that because I wanted to have a lifestyle which was set up so that I would do this if I was not getting paid. If I have to go to work and I have 30 calls to answer or a lot of emails to look at or whatever else, it just becomes a drag. So we don't. So I could not come up with these ideas on my own. I came up with this idea from Warren and Charlie. and I copied it. So one of the most important models that you can adopt is the model of cloning. When you see someone doing something smart, just incorporate it. That's a good way to go. There's a friend of mine, Guy Spear. He came to Peking U with me, I think 2-3 years ago. And Guy and I are good friends. And in fact, he was just in Irvine last week. And we were in Vancouver before that for the TED conference the week before that. So we are very good friends. And he's an investor. He manages about 200 odd million. And many times we talk about different stocks and ideas to, just get different perspectives. So Guy loves to own these great businesses that have very strong moats, and they are blue chip, really good businesses, okay? The problem is that when you own these really great businesses, everybody knows they are great, okay? So the price is very high. Usually the price is very high. And I tell him, it's not about the great business, it's about the great investment. So a company can be really good. It doesn't mean it will be a good investment. And a company can be not so good, and it could be a great investment. So the interesting thing about the investing game is, if the game was simply about finding the best assets or the highest quality businesses, it would be a very simple game. Because we can obviously figure out what business is great and what business is not so great. That's not so hard to figure out. So I found this okay business in India, which I thought was going to become a better business. People haven't heard about it. It's kind of unknown. And I told Guy, this business, this quirky, unknown business, is going to be a great investment. Great investment. And I told him, so he owned MasterCard in his portfolio. MasterCard is a very good business. Very high quality, almost a oligopoly, 2-3 players own the market. They don't need any capital to run the business. I mean, like 40% of revenue is profit. It's a great business. I said, this MasterCard is like at 30 times earnings. You made a lot of money. He already made like 12 times what he put in. He bought it a long time back. He put 1 million, it became 12 million. So I said, you made a lot of money. It's not going to go from 12 million to 144 million. If in the last 12 years it went from 1 million to 12 million, let me just tell you, next 12 years it's not going from 12 to 144. So I said, Guy, listen. I shook him up. It's time to sell MasterCard and buy Suntech Realty in Mumbai. Okay? This unknown company. And of course, Guy, in polite terms, told me, get lost. So, what I do when people do that is I like to play mathematical games. It's just fun to play mathematical games. This is a picture of a small poster in my office, and I have many of these. At any given time, I have maybe 10 of these. Because I run into these humans who don't understand the concept of great investment and great company. So I told Guy, okay, here's what we're going to do. It is October 14th, 2018. This is when I had this conversation with him. In your corner is the phenomenal MasterCard with the impregnable moat, oligopoly business, great CEO, everything is fantastic. And that's called the Guy Spear pick. At that time, MasterCard was $204 a share, In my corner, this small, stupid company in Mumbai, Suntech Realty. No one even heard of it, right? And MasterCard, the market cap was 212 billion. Okay, 212 billion. It's a blue chip company. Suntech is less than 700 million. It is absolutely, I agree with Guy. The guy running Suntech is not as good as the guy running MasterCard. The moat of MasterCard is a lot better than the moat of Suntech. But that's not what this contest is about. This contest is about, I gave him 12 years. So I said, we're not going to have a 1-year contest because anything can happen 1 year. Because basically one of the things that Munger and Buffett say, that if you have a business with great economics, over the long term, your results will match the returns that the business generates over the long term. So MasterCard generates great returns. And I said, Guy, you've got such a great company. I got this useless company. We're going to go for 12 years. And every year, now when it is October 13th, 2019, it'll be a pleasure to go to work in shorts and send Guy an email. Dear Guy, it has been 1 year. Here's where we stand so far. 1 round is over. Another 11 rounds to go. So let's look a little further in these two businesses. Look at that. This is MasterCard. If you bought MasterCard at the IPO, when it IPO'd in 2006, it was $4.23 in the IPO in 2006. And now, yesterday, it's $254. More than 50 times, maybe 55 times, in 13 years. Unbelievable. And Guy didn't even buy over here. I think he bought at maybe around $20 a share, maybe somewhere here. 2010, somewhere here he bought. And every time I meet Guy, I tell Guy, have we sold MasterCard? No. I cannot sell MasterCard. It's too precious. Precious, cannot sell it. How can I sell it? Look at this. Can you sell this? You can't sell this, okay? And then we have just some data, okay? So it's 261 billion market cap. The trailing PE is 42. I'm almost having like a cardiac, 42 times trailing PE. Trailing return on equity is 106. We give you all the slides. You don't need to take pictures, don't worry. I send you all the slides. Trailing return on equity, 106%. And annualized return since the IPO, 37%. Unbelievable, great. But that's in the past. It's not going to help Guy in the future. We care about the future, we don't care about the past, right? So now here's Suntech. Look at the stupid chart, okay? MasterCard, so beautiful. Suntech, so useless, okay? Now, let me tell you why I don't want to make this session about stock tips. So don't think this is a stock tip. It's just to explain some concepts, okay? So in India, about 3 years ago, there was something that known as demonetization that took place. Some of you may be familiar with it. But what the government did is they made a bunch of currency notes illegal. And you had to put those in a bank and then get different notes because they wanted to wipe out cash transactions and black money and all these things. You know, there's an underground economy, they want to kill that. So real estate transactions in India in 2016 and earlier, they were always some portion paid by check and some portion under the table cash. It's a combination, right? When demonetization took place, it became impossible to pay cash because the cash is all illegal. So what happened is the real estate firms, most of them, they dealt in a lot of cash. And so people thought, oh, the real estate market is just clobbered. It's gone because you can't, now you don't have, people don't have the money. You know, they can't come up with money from the banks. And so I noticed that in November or December of 2016, that these real estate companies that were publicly traded had collapsed in value because of this thing. But the people forgot something when they did that. So if you look at that circle, when Sunteck was trading about 100 rupees a share, one could do a very simple exercise at that time. I could look at the real estate Sunteck owned, because it was just listed, what they own. They had a bunch of finished apartments, they have in construction, they have land, all these things. Those have a valuation, either a market value or a cost value. And this was a company, there were few companies that never dealt in cash. They always did things the right way. And so before demonetization, it was a disadvantage to them. Because people would try to tell them, no, I cannot do this if you don't do cash. They said, we can't do any other way. We have to do everything properly. After demonetization, what happened is that 90% of the real estate companies disappeared. They can no longer function in that economy. So there were three things that took place in India in real estate. Demonetization, something known as RERA, Real Estate Regulatory Act, and GST, Goods and Services Tax. The combination of these three, the end result was that 90% of the developers were out of business. And very, very few developers were left standing. The ones that were left standing were the ones that always conducted their affairs with very high quality. You know, they delivered the properties, they did everything by the rules, they followed everything. Sunteck was one of them. And so at that time, when the stock was at about 100, the market value of the company was less than $200 million. Just one project that they had, where they had 60 finished apartments in the heart of Mumbai, those apartments were worth about 500 million. There's no debt. So the market cap is 200 million. They have 25 projects. One project is 500 million. Okay, there are another 24. So when I started to look at the value of everything they had, it was many times the value of the stock. There's no comparison. And reason why is that? Because people, when there is a seismic event like this, demonetization, they just run to the exit. Everyone just sell the stock and run, right? So the stock is sitting there, no one's interested. I am interested. I tell the broker, every share. Anyone who has any shares, just buy as much as you can, okay? And now we own 9.999%. That's the maximum I'm allowed to own. So the maximum that I could buy, I bought. 1/10 of the company we own. And you can see what happened after that is in the last 3 years, it went up almost 5 times. It went from 100 to almost 460, close to 500, right? And in fact, I'm not even doing the contest with Guy from 2016. I'm not using that 100 rupee price against MasterCard. I'm using a price when it's already gone up quite a bit. So if I go back, I'm not using 100, I'm using 355, right? So it's already gone up quite a bit. But I said, you know, Guy, even with the 355, we'll kick MasterCard's ass, no problem, okay? And I'm hoping that in 5 or 7 years, he will understand what is already obvious to all of you, So there's Suntec. These are the numbers. The market cap is now close to $1 billion. Trailing PE looks high, 30 times. ROE is low. The returns since the IPO I don't care about, but the return since demonetization, which is when we invested for the first time, is 400%. The annualized return since then is about 95%. And here's where we stand today. So we started October 18th. Until today, MasterCard is up 25%, pretty good. From October to May, 25%. Suntec is up 38%. Okay, so far, Mohnish is ahead. Well done, Mohnish, so far. But we have 11 and a half years left to go. 11 and a half years. Now, let me just tell you something else about MasterCard. Buffett invested in Coca-Cola. He bought Coca-Cola stock for the first time. And from 1988 till 2000, it went up like 12 or 14 times. It went up a lot. They put about 1.2 billion, it was worth like almost 15 billion. Very nice one. From 2000 onwards, so Coke was very cheap, by 2000 it was trading at 40 times earnings. From 2000 to 2018, Coke delivered a return of less than 3% a year. Okay? Why did it deliver a return of 3% a year? It's still a great company. The Chinese love Coke. Do you love Coke? There you go. Okay, so Coke has a global footprint. It does well everywhere. The bottling business is separate. It makes a lot of money. The return on equity is great. Just like MasterCard, it's a great business. But the thing is, the starting price that you pay matters. In 2000, you were paying more than 40 times earnings for that business. And by 2018, it's trading at 17 times earnings. So the multiple went from 40 to 17. Okay, so MasterCard actually, in my opinion, is not as good a business as Coke. Why is it not as good a business? Because it is subject to disruption. You know, in China, no MasterCard. Do you guys use MasterCard in China? No. Wiped out, not allowed to come in. Okay, and the payment systems in China are way more advanced compared to MasterCard, and they're much cheaper, the frictional cost is much low. MasterCard gets 2% on every transaction, 2%. In 2030, I don't know whether they will get 2%. You know what I'm saying? So now if I go to my favorite stock, Moutai, do we love Moutai? Yes, absolutely. What a company. The ultimate moat, I can't think of another company which has a better moat than Moutai. Okay? Can Moutai be disrupted? How can Moutai's business collapse? What would cause the business of Moutai to collapse? So we know, if I compare MasterCard to Moutai, MasterCard can collapse. Moutai is very, very hard to collapse because of a 1,000-year history, and it's embedded in people's heads, and they have so much inventory, and you know, the thing is, it's got all the brand cachet, China is rising, all of those things, there are a lot of tailwinds that keep coming, they can keep raising the price. You know, just keep raising the price. So the thing is that Moutai, phenomenal mode. So MasterCard, one of the issues is that payment systems, it may be possible that in 2030, MasterCard is still doing fine. Possible. It's also possible MasterCard in 2030 is not doing fine. Right? We don't know. So anyway, my way of dealing with this is play a game. Okay? Let's play a game. And I could never get Guy to buy even one share of Suntec, even after the contest started, everything. But maybe in 5 or 7 years, we'll go to Q&A in a second. We'll do that in the end, okay? So we'll do that later. But let me continue so we can finish this off. Now we have this company. So I told you I have many of these contests running with many different people. Okay? Another person, and you can see it's blacked out here. I didn't want to put his name. You know, protection of privacy. Guy, we don't care about Guy's privacy. Okay? Other people's privacy, we care a little bit more. Okay? So, a money manager told me recently, this is just April 7th. This game just started 23 days ago. Mohnish, Motherson Sumi is an unbelievable business. I said, Mr. X, forget Motherson Sumi. The action is in Rain Industries. Now, in this case, both businesses are in India. Okay, and let me just explain something about Motherson Sumi. You will enjoy this. Look at that chart. I think I can MasterCard chart right on top of it. So Motherson Sumi, in 1994, when it went public, it was at 9 cents. 9 cents. Now it is at 146. 30% annualized return over 24 or 25 years. It's great. What does Motherson Sumi do? Okay, so first of all, the name, Motherson. The guy who runs it, who I met, he's a great guy, I like him a lot, Chand, started this business with his mother. Okay? Since he started the business with his mother, he said, the name should be Motherson. Okay? Motherson. And Sumitomo in Japan is a partner of theirs. So, Motherson Sumi. That's the name of the company. Okay? But Motherson Sumi is a very unusual company. So they make auto parts, automobile parts, okay? But the way they run the business is completely different from any auto parts company in the world. So he has acquired over the last 25 years, maybe 30 or 40 businesses around the world. China, Europe, India, everywhere. They've got dozens of plants all over the world. But Chand, who's the owner and CEO, says, we never call a company to tell them we want to buy them. We have never done that. And if some company calls us and say, please buy us, we also do not do that. So I don't approach any company, he says, to buy them. And any company that comes to me, I also don't buy. He says, my customer is BMW, Volkswagen, Fiat Chrysler, etc. So he says, BMW will call me and say, Chand, I have a rear view mirror maker parts guy who is losing a lot of money. And they are losing $2 million a month, and I think they're going to go out of business. And my 7 Series BMW line is going to come to a stop if that guy goes out of business. So they say to Chand, can you buy that business? So Chand says, I only have 5 or 6 customers, BMW, Daimler, Fiat, blah, blah, blah. GM and so on. So when BMW calls him, Chand says, BMW, don't worry, I'll take care of it. So in 2 days, he looks at the business and tells BMW, you are right, this business is losing $2 million a month. It's a worthless business, not worth anything. So Mr. BMW, here's what you're going to do. You're going to write me a check for $100 million to cover my losses for 4 years, 24 million a year. Okay? And you're going to give me a contract that you're going to buy my product. So what is the acquisition cost? Minus 100 million. BMW writes him a check. Why does BMW write him a check? The 7 Series line is going to come to a stop. They can't stop the line. You cannot stop making BMWs. They'll lose billions of dollars. So Chand buys the mirror manufacturer, and he does not make many changes. He only makes 2 or 3 changes. First change, whoever's running that plant is fired. First change. Whoever's the owner of running the plant, they're gone. Second change, he looks within the organization, finds a person no more than 35 years old, and tells the person, you are now the new plant manager. From the same plant. He does not send his own people. So if they buy a plant in Austria, they'll look at the people in Austria, in that plant, and they'll pick a guy and say, and the person they may pick may be 4 levels below the CEO. They don't care. Straight, he becomes a top guy. The third thing that typically happens when Motherson Sumi buys a plant, in about 3 months, it stops losing money. You know, he got paid 100 million. He only lost 6 million. After that, in next 3 months, it's making a little bit of money, and after 1 year, very solidly profitable. Okay? And BMW, extremely happy. And how many companies can BMW call like that? Not many. So Chand understands that his job, who is his customer? His customer is BMW. What is his job? Take their pain away. And they will call him and say, Chand, this harness company, I have a problem. Chand says, you have no problem, I'm there. In 1 day, they do the deal. Other principles that Motherson Sumi uses, they have never relocated a plant to save on labor. So they don't take a plant in Germany and move it to China. Never done that. Because they want to be loyal to the people who are there. And they said, we'll make it work with those same people. We don't need to move the plant. The other thing that they do is, Motherson Sumi runs on SAP. Their software platform is SAP. They don't impose anything on the company they acquire. So if the mirror company is using some other software, they will build all the interfaces at Motherson so they can deal with them. But they don't ask that company to change. And over time, that company is going to realize I'm better off being with SAP as well. So they'll change. And then what Chand has done, because he's a very good manager, he has his plant managers, who are all these young guys, talking to each other. They meet every 6 months or something, sharing best practices, going back and forth, and on and on. So Motherson Sumi, I think in the last 2 or 3 years, I met about 200 public company CEOs in India. Or 200. No one is as good as this guy. No one. Best out of the 200. But I took a bet. I took a bet against Chand. Okay? Just like I took a bet against MasterCard. And I told the guy, Chand will lose. Okay? So you know what the fund manager told me? Mohnish, can I share this picture with Chand? Okay, the CEO of Motherson Sumi. I said, please feel free. Okay, because Chand is very competitive. Okay, the moment he sees a picture like this, his blood will boil. That he wants to take the other company out. I said, you share the picture, do whatever you want. Rain is going to blow him away. Okay, stupid rain that no one's heard of. Okay, so here's Motherson Sumi. See, my job is so much fun. You go in the shorts, you start a contest, and then just watch the drama. So much fun. That's why I don't need to get paid. It's fun without getting paid. Okay, so here's Motherson Sumi. 6.6 billion market value, trailing PE is 27, high return on equity, and since the IPO, 30% a year. Okay? This is not even the thing. What Chand does, Chand tells you in 5 years what the revenue is going to be, what the profit's going to be, what everything's going to be. He already told the market. So he already told the market that in 2023, my revenue will be 70% more than today. So the market tells him, Chand, how are you going to get 70% auto parts? He said, don't worry, the phone call will come. I'll keep doing the deals, right? So Chand already told the market what he's going to do. Then we have Rain Industries. You saw the Motherson Sumi chart, right? Just to remind you of the Motherson Sumi chart. This is the Motherson Sumi chart. Here's the Rain Industries chart. Nothing happening from 1991 till 2015. Flat. Okay? The opposite of Chand. But I don't care about all this. This is when I invested for the first time. So, I've got to make sure I keep you guys on track. So, Rain Industries, somebody sent me, some person I don't know, sent me an email which had a write-up on Rain Industries. I never heard of this company before that. So someone sent me a PDF, about 20 pages, explaining Rain Industries. 3 hours after reading the PDF, I'm buying every share. Okay? Told the broker to every share, whoever wants to sell. I own, guess what? 9.999% of Rain Industries. Just like Suntech, 9.999%. They won't let me go over 10. So just one share below 10, I just sit there. Okay? And why did I buy Rain Industries? So the thing about Rain Industries was that when I saw the report I got, the market value was $200 million. And it's in the aluminum supply chain business. Like they make, these coal tar pitch and different products which go into the manufacture of aluminum. And it's an oligopoly. There are only 2-3 players in the world who provide that. So it's very concentrated. When I read the report, I said it's a very high probability that in 1 year, maybe in next 3-4 years, they'll make $200 million. So I'm buying the whole company for $200 million. In 2015, I thought by 2018 or 2019, in single year, they'll make $200 million. Okay? Of course I won't buy the stock then, right? And that happened. So I bought at about 35 rupees a share, and for some time nothing happened. And then in 2018, it's at 450 rupees a share, from 35 to 450. Okay? And then it comes down all the way, right? So even if I look at where it's come down, still a 3x. It's still 3x in 3 years. But at the peak, it was 12x in 3 years. Okay? Why did it do that? It did that because people did not understand the business. Motherson Sumi is a business everyone loves. 30 analysts are following it. Okay? Chand talks to all of them. They love him. MasterCard, 30 analysts following the company. You're not going to get mispricing. Rain Industries, nobody follows it. So, and I realized that what I realized with Rain, so Rain is very important because it's like Suntech. There are moats. Mautai is a moat, Motherson Sumi is a moat, MasterCard's a moat, and there are hidden moats. Hidden moats are very important. Rain is a hidden moat. So this guy who runs Rain, he got the business from his father. They never had any capital. That's why from the beginning, they were a cement plant. They couldn't do anything. He borrowed $1.5 billion high-yield debt in the US market and bought 2 large businesses with nothing down. So what he did was he borrowed $1.5 billion, bought this business. If the business did not work, he did not put even $1 of his own money. The bank can just take the business. He doesn't lose anything. If it works, it's his. And both the businesses worked. And then he paid on the debt. Now suddenly the $1.5 billion buy was 10 times the size of the company at that time. So there's a company that has 200 million in revenue, it goes and buys a company that has 2 billion in revenue. That's what happened with Rain. They bought a company that was 10 times the size that they were at, and they borrowed the whole thing. And they borrowed it non-recourse, where if it doesn't work, it cannot affect them. Very, very brilliantly done. Then the other thing I noticed with Rain was that when they put up incremental capital, they want very high returns. Like they have a project going on right now where they are spending about 70 million, some capex is going on. It will increase earnings by 45 million. You spend 70 million, pre-tax, you're getting 45 million. Really good return on equity. So anyway, the bottom line is Rain is another company that is got these things going on. And, market cap now is about 500 million, 550 million. The PE, it's only 6 times earnings, unlike 30 times there. Return on equity, and then, since I invested, it's 36% annualized and 248% overall. So, and then if we look at kind of what has happened in that contest, this contest only started 3 weeks ago, so there's no data. But Motherson is down about 4%, and we are up about 15%. So the ship is going in the right direction. But if we meet again, I'll give you an update. What's going on? Okay, so the main thing I wanted to convey to you was that the interesting thing about investing business is it is not only about finding great businesses. Of course, it's good to find great businesses. And in fact, I believe Rain actually is a great business. It's just sort of not known like that. Maybe in 5 or 10 years, the guy who runs Rain will get a reputation like the Motherson guy. Maybe. If and when that happens, it'd be at 30 times earnings. It'll get to that point. And in the meantime, we own 1/10 of the business and we just sit on it, let it ride.